What's up, everybody? In this video, I wanted to talk about some things or some stocks that I might be buying if the market decides to pull back a little bit. I'm not saying it's gonna collapse or crash or anything, but I mean, again, we're extended. I've been saying this for a couple weeks, or a pretty good amount of time. I'm not sure, at least a week. But yeah, so I think if we do pull back, got some cash ready to buy some stuff. So what would I be buying? So we'll just discuss that in this video. I do want to do a quick update though. Gold had this nasty wick that is very bad in my opinion. It's 11:30. The market's still open for like 4 more hours, so this could change. But definitely don't right at the open it collapsed. Didn't even try to go up. Not collapse, but it fell. So not really the type of reaction that I wanted to see. So that's not the best in my opinion. But yeah, silver also, it looks the same wick, but like it's right around a key level where it didn't hold. So not too happy with that. I might be trimming some positions like NEM. I don't really want to trim KL just because if this does go up, like what do you call it? Just how the tax rule works, and then I can't really take profits. It gets complicated. It's just dumb. But yeah, things I'd be adding in price points. This Apple, I guess I'm still trading this, so I don't 3%, maybe 33.25. Anything on that line, good dividend growth as well. I really want to add these to my portfolio, make a more solid base of the dividends. Just basically get more dividends that are going to grow over the next like 5 years, hopefully. Mag. I think if I had to buy anything silver commodities related, it'd be Mag. I don't think I'd be interested until I guess the 14 bucks, if it does, which I don't know if it will. What's today? Friday, yeah. Debating cutting some off. Just because, we had this day yesterday, right? It was strong in the morning, then it kind of faded. It's okay. Big volume, but then we have this day where it's still getting kind of hard hit. We got this silver pressure, so I would not be surprised if this came back to here just because of this candle and that sell-off. So debating getting rid of maybe like 25% of mag today. I don't want to be hasty though, and be a part of the selling, but raising the cash, especially when I'm up, like 25%, it's like why not? 3M, I'm not really looking to add. My dividend right now is 3.8. It's actually really oversold right now. But yeah, not really interested in adding. They've been increasing the dividend. Let me see, I had it on the other screen. Dividend increase. What was I just gonna say? Each year they raise it about 2%, 6, 15, 5, 8, 20. It's kind of all over the place, so I'm not incredibly interested in buying more at these prices. Or I guess that's what we're doing. What would I buy it at? Honestly, if it falls back to this line, I think that'd be kind of cool, but probably not. I think there's other options to buy. Not really looking at NEM. Actually, was that line that I had? Whoops. I mean, if NEM gets to this trend line of 40, again, I'm doing really big macro stuff. Like, this might not happen for like months. But yeah, that's a solid trend line back from 2016. We got Corona. Yeah. Let's see, Verizon. Again, yeah, there's a lot of these trend lines I'm looking at. This trend line right here for Verizon. It's like, if Verizon falls below 55 bucks, like, anytime I'm gonna buy some more. No reason not to add. They aren't really increasing the dividend though, which is kind of sad. I think I'll pull up the thing real quick. Dividend growth. It's about 2% each year. 6%, 5. The last like 4 years, it's about a 2% increase, so it's not really good, honestly. It's pretty stable though. Yeah, I wouldn't be like gung-ho about dropping mad money into Verizon. I think it's just more of a backbone to the portfolio. Dividend, I think it's like 4%, but again, like if it's only increasing like 2% a year, it's not really even being inflation. Like I'd rather buy like Lockheed right now. Let's say we get it for like, let's just say we get it for 350, right? So 2.6 times 4 divided by 350, that's basically 3%. And on top of that, it's growing like anywhere from 8 to like 13% per year. I'll just whip up the thing real quick because I have it. 9%, 10, 9, 9, 9, 9, yeah. Or 10, 12. Anywhere from 8 to 12% basically a year dividend growth. Like, I'd rather get that a little bit less, 1% yield, and get that dividend over time, So, that's that. Exxon, not really looking to add. I actually have that just my shares because will that happen? I don't know. Crude's still bumping higher, 1% today. I mean, I guess it did fall a little bit, but this crude chart looks great. I'm not trying to play around with this when I know in maybe 2 or 3 years this probably should be like $80. I don't know exactly, but I'm chilling. I'm not looking to add Exxon. Alright, now it's other stuff that I'm trying to buy. General Dynamics. General Dynamics at 150. Oof, that is spicy. I think it's probably gonna roll over. We're looking at monthly candles. Sorry, I just started talking fast. I guess I got too excited. But, yeah, they got some like trend line going on here. Not really interested in the trend line. I'm more interested 150 area. If we get it for 150, they got a $1.19 dividend right now. Get it for 150. That's a 3.17 dividend. I think they are also increasing it. Let's see, 8, 9, 10, 10, 9, 10. Annually about 8 to 10%. So that is spicy. Let's see. No. None of these I'm too interested in. Smith & Wesson, actually, they had a great day today, up 15%. Good earnings. They increased their dividend too. They're just making a lot of money. We got a strong support at like 24, but if it does fall like 15 for some reason, we got a lot of, I guess, buyers there. Are we clearly with the wicks? Let's go to just my watch list for investing. We got Apple. I'm just not interested in investing in tech at these prices. We are trading it right now, though. Caterpillar, yeah, that's got to spill over a little bit. Talked about CCJ. Clorox. This I just have to watch because it's a pretty good company if you get a good valuation on it, but EMX at this trend line down here, maybe like $2, be interested. I got all out of this. Talked about that. General Mills. I wish I bought General Mills like $40. I even had an alert. When was this even set? Man, I don't even make alerts anymore. How do you even get rid of it? Cancel alert. Just a solid dividend. Yeah. Just pretty stable. I don't think I really added Google. Kind of going again parabolic. $2,000. I think would be a decent price. There's literally nothing on the charts, on at least monthly chart, that would show like, oh, Google at this price is okay. But I just think 2,000. Yeah, see, we had some couple weeks of consolidation. It makes sense. It's $2,000. They don't pay dividend unless I kind of want that cash flow generation. Just that passiveness, but yeah, definitely interested in Google at $2,000. It's expensive though, so I can't really buy too much. What the heck is going on with this chart? What's up with these trend lines? Let's clean this up a little bit. What is all going on? like it almost would be. I feel like having some financial thing, especially, let's see, 2 years ago, 80 cents, 90, 50 cents. You could have like a double dividend increase already. I think adding some of JP Morgan or the Tarantino Bank would be fine. Where's TD? Just go to it now. Toronto, not Tarantino. What am I talking about? Man, I wish we bought this back here. But, I think JP Morgan's just a little bit more stable. This company has more room to grow and everything, but can't really go wrong with JP Morgan. Let's see, Kellogg's, just some safety, you know, kind of like General Mills. Maybe like $50, but not really, you know, interesting. KL, Kimberly Clark, not too interested. Coke, we talked about Lockheed, McDonald's, I completely forgot about McDonald's. Mickey D's, that trend line's pretty strong, but Corona definitely messed with it. I am curious, what do they do with their dividend growth annually? 6, 12. You see, they're growing their dividend a lot, but they also have like a lot of debt. They're just slapping on the debt and growing their company, but also raising. I think McDonald's, I'm fine not buying. Yeah, Microsoft. Oh, it's kind of crazy. Like when you do see these like just parabolic moves, like I don't know, like even if you, I don't know, just take a look at this. Like, oh, that's parabolic, and then boom, and crashes. Oh wow, Microsoft is 2008. I am not saying it's gonna crash again. I'm just saying, notice historically these moves are wildly high. And I mean, again, like even here, if you thought, oh, it's gonna go down, it's been too high, and then it just goes higher. So no way to forecast it. Just you can't even see like the Corona crash in here. I mean, you can, but like not really. Wild stuff. MTA, yeah, not gonna really invest in that. We talked about that. Realty income. Adding a realty or REIT is important. I think in a portfolio just a little bit. Probably in like, was it the Roth IRA thing? But I don't think O would be the one for me. I think I'd UBA, because I can like visit these stores or see their property. Oh, it's a lot larger. Pepsi, Procter Gamble. Yeah, it's interesting. I think maybe $100. I'd be interested. What do they do with their dividend too? It's just more stable. So 4, 3, 3, 1. Yeah, very slowly. Not too aggressive. Prudential Center Insurance Company. Wouldn't really be too interested in buying that yet. Space. Simon Property, Store Capital. Yeah, this would be a good REIT. Actually, Store Capital, the company that only allows profitable, but I think they do. Dividend growth 4.5, 7, 6, 7, about 20. Wow, that really collapsed. It blows my mind. Not blows my mind, but just it's fascinating. I don't know, it seems alright. Store Capital, UBA, Visa, I would like. Oh, this seems to be kind of funneling a little bit, right? Got some like funnely looking pattern here. I like Visa, the financial space. I think it's what it's in mostly. 32. I don't know. Walmart, they're growing their dividend like a penny increasing their dividends rapidly. I mean, like rapidly, but historically, like it was 10 cents 30, then they decrease it when they don't make money. So then it was 5 cents and they increased it again to 55. I think it's more of a play for multiple years, maybe, or at least looking back on the last, may say 15 years, but something like 3M, again, like 100 years of dividend payments or something like that, like, can't really go wrong, at least for the purpose of sustainable cash flow. Basically, if a company's increasing their dividend like 10%, let's say, per year about, like, and I can get them for a dividend, or an initial dividend of like 4%, like, that just sounds crispy. Like, I gotta buy that, like, from a value point of view. I mean, it's also assumed, or we're assuming that they're gonna increase their dividend a little bit more, or maybe not 10%, but let's say like even like 7 or 6 or even 5, as opposed to like a Verizon where, yeah, it might not fluctuate that much, but the initial dividend you get it at is almost going to be the dividend like you're going to keep it at. Kind of, if we factor in inflation, like, I kind of want to see these companies that I'm buying for the purpose of dividend growth to be increasing a few percentage points above inflation. And we don't really even know what inflation is, but it's definitely more than 3, or definitely more than 2. I'm gonna say it's like probably 4%, maybe 5. I don't know exactly. It's just taking a guess, but it's definitely more than 2. So if a company isn't increasing their dividend by more than 2%, I guess annually, then I'd rather just kind of be in something else. Did we get a price point on JP Morgan? No, we did not. Let me see something. 90 cents. What's it? 140. It's about 149 right now. 2.4. But let's say we get it for what looks good. I mean, this price looks pretty good. Actually, does it? What is this line? What is this? What is this line? Let's get rid of that line. Let's get these wicks in here. About this price is probably 120, just psychologically. I mean, let's say for some reason it goes to 120. I don't know if it will. Let's just say it does. Whoops, what did I just do? 123, 3%. That doesn't make sense. Does it? I guess it does, yeah. I mean, that's a big drop. So that, like, that's crazy. Like, so the difference between this price and this price, assuming they keep their dividend, is 20%, but the dividend's only 2.4 compared to 3%. But so it's like, even if you get this big move in, like, just selling and taking the profits, almost better. But I guess, yeah, it's why you're doing it. So I want to do it for the cash flow. And I guess, yeah, thinking really long term. The thing is, like, this is important too. This probably should be a topic for a different video. Not sure how many people are even listening to this part, because I know audience retention drops off a lot, like at like 10 minutes. But, and I know that these videos make people kind of sleepy, but like, everyone talks about, like, yeah, like, oh, invest for the long term. Don't worry about market corrections and crashes. And it's like, yeah, that's all fine and dandy, but like you could make so much more by just being kind of smart, right? Like, again, like, I'm looking at this, I'm like, bro, like, something's gotta happen downward. Like, I don't even put it, like, something's gotta happen downward, right? So why would I not take profits now? At least some, not everything, right? Maybe it falls, maybe it doesn't, maybe it goes higher, but like, the higher this goes, the higher probability it probably goes down and corrects at some point in the near future. So, I think, and people say, like, oh, just hold on long term, don't think about it. I think they got something going for them, right? But that's not how, like, super smart people, or not super smart people, super smart money, like the hedge funds and everything, think. Like, they're taking some profits and they're buying it back when it's low. You know, they're doing other things to increase their, I guess, money. And I guess if you passive, because not only are you getting it for a cheaper dividend, let's just say hypothetically, let's see, like hypothetically, but you're also going to get, maybe it does go back, you're getting that like 30% gain as opposed to a 20% loss, which that's going to wipe away all the dividends that you could potentially make, and then it goes back, obviously, maybe eventually, if we're talking about super long term, but I think, again, just having cash available is important, and getting in at the price, even if you're investing for the long term, I think that kind of adds up. Again, you don't want to have, it's a FOMO I'm thinking of, you don't want to have, like, nothing in the market either, that's what I meant to say, but at the same time, you don't want, or in my opinion, I don't want to have my money, like, if I have a big gain in something, why would I not take the profit if I'm anticipating something that gonna happen, or if I'm just uncertain? I don't know. I think I'm just rambling now, but yeah, I'm loving these big trend lines. I think AMD, I should, from like a technical point of view, I should have bought that like right here, but anyway, that's another topic for another video. Anyway, I gotta go, but thanks for watching. Hopefully you enjoyed the video. Let me know what some things you like to buy or might be buying below if the market does crash.